So now that we've downloaded the Excel spreadsheet, I'm going to go ahead and open it up. It's right here on my desktop. Just called Cafe Financial Statements. I'm going to double click it. Alright, now this is comprised of about 7 sheets. The most important 2 sheets are your parameters and your growth projection sheet, because when you make changes in your parameters or your growth projection sheet, it will change all the other sheets in the Excel workbook. So this parameter sheet is basically the holy grail of this Excel spreadsheet. So here it has your revenues, and basically the way that revenue is calculated, because it's a cafe financial statement, it's based upon how much you sell each cup of coffee for. So I've just taken an average number and said that the average cup of coffee you sell is $5, and that's what's right here. Then you have things like how much your cups cost you in your sleeve, your hourly pay for your employee, how many hours your employee works every week or every day, how many days your employee works every week, how much your coffee costs per cup, and then how much you're paying yourself every month. And then down here you have fixed costs like equipment, monthly rent, monthly utilities, and your unknown costs, which is estimated to be 20% of your total cost, which is important to include in your financial models like this because it gives you elbow room in the instance that one of your variables changes. And then of course the startup cost of $30,000, because we are assuming that you're starting a cafe from scratch and there's expenses that go associated with that. Now I don't think that these are accurate reflections of costs, so you'll have to adjust them based upon the cost in your geographical region and based upon the resources that you currently have, so these can be changed. I'll have further tutorials I'll explain more about how to change these things. Over here you have your growth projections tab. Now this is important because it tells how many cups of coffee you're estimating that you sell every single month. So we're estimating that you don't sell any the first 3 months. That makes sense because you have to find your space, you have to get everything arranged, and it's usually if you're projecting starting a business, it's usually good to have at least your first 3 months estimating that you make no revenue. It shows that you're not too overly optimistic and you're more of a probable case scenario. So here you sold 250 cups of coffee month 4, 350 month 5, etc., etc., etc. You can change these numbers to whatever you want. You can change this to 900, and it will be reflected in all the other sheets that come after this that we will soon be exploring. Then down here you have your employment schedule of how many people that you hire, and so you can figure out exactly how many people you're going to need to hire as you grow your business. Right now we're assuming you have 1 employee, and then of course yourself right here, and that brings a total of 2. Okay, here's your salaries payable. Now, like I said, you change your how much you pay your employee. These numbers will change right here. I'll go ahead and do more tutorials explaining that. Go ahead and play around with it yourself, and that comes to a total of about how much you pay your people every single month. Now here's your monthly income statement. This is important because it tells about how much money you make every single month. And so you can see your revenue is up here, it's your sales, and then after that everything else is an expense of some kind. And it looks like month 1 you're actually 34,000 in the hole, and then look, month 4 you actually made 378 bucks, and then it drops down and whatnot. Now these numbers will all change based upon the changes that you put in the parameter sheet and whatnot. Here you have your monthly balance sheet. It's very primitive, but it helps you see how much you have in assets and liabilities. The one important thing that you need to know, and one thing that you can change in the sheet, is paid in capital. What paid in capital is basically how much money you need to start this business. That can be money that you've generated from your day job and you've saved. It can be money that you got from some family members. It can be money that you got from some friends. It can be a formalized investor like an angel investor or a venture capitalist, or it can be a loan from a bank. And this is where you would insert that money. So you can make it 0 or whatever number you want. We're going to say right now that it's 0. Okay, so here's your monthly cash flow sheet. This is important because it tells how much cash flow you have at the end of the month. Now the one important thing is your net change in cash. Okay, so if this is ever red, that means you're out of business or you've gone out of business. So right now it shows, okay, this is all red, so basically your business has failed. So what this says is that you're going to need some startup capital, at least more than $65,920. So if you come back to your monthly balance sheet, this paid in capital, we're just going to put that back at $70,000, and we're going to see what it does to your cash flow. Okay, now it looks like you have $4,080 in month 1. Looks like you're going to actually make it. Your business is going to fail. And then you can go down all the way to year 5, and you can see how much cash flow you have in different scenarios. Okay, now the final sheet that we're going to review in this tutorial is a break-even analysis. This is important because it gives you a graphical view of exactly how long it's going to take you to make all of your money back, so you can figure out if it's actually worth doing this business. So here's your that point of which your break-even is, by definition, is when total sales is equal to total cost. So when this red line intersects with this purple line, that's when you break even. So this is telling us that you're going to break even the beginning of quarter 1, year 3 about. And then up here you have your payback point. That's where the payback line here is basically your total cost plus that $70,000 of paid equity that you have in. And so where the red line intersects with the blue line, that indicates, that's where you've actually recovered all of your investors' money as well. Now this sheet's only important really for investors and people looking at investing in your business, because they're going to want to know what your break even is. So that concludes this first tutorial. And following tutorials, we will actually explain exactly how to change your parameter sheet and program things. Because, like I said, this is very, very simple Excel spreadsheet that I've made, and it's very good to be able to change these variables and be as exact as possible so that you can manage your cash flow decisions and make decisions like, oh, should I hire an employee next week? Or make decisions like, oh, I need to raise $150,000 instead of $70,000 for this venture.